Howdy, folks. Today we're talking about Microsoft stock. Yes, we are. Microsoft reported earnings. You know, it's a fantastic week of earnings. We got several videos coming up. Don't you worry, we do. Um, we got Microsoft stock here reported after hours. You see, we've had a little bit of flippy floppy going on right now. That's what I say when I look downstairs a little bit. Um, Depends on the time of day, but a little bit of downward to start, a little bit of upward following that, and then back to the downward, okay? Downward facing dog. We're doing a little bit of yoga right now. Right now, culminating right around 1.5% downward movement. I mean, again, we're about an hour and a half after close as the time I'm recording this, so we'll see where she ends up after all of this. Let's take a look at these earnings and see what he said. If you remember the video, my earnings video from a couple days back, I expected a beat here, right? I thought it was going to be a double beat, EPS, revenue, beat. And I expected the revenue to beat by right about $1 billion. I want to see what happened. Obviously, when I see this stock move downward, now 1.69, fantastic percentage. Get rid of that one. We'd be talking a little bit more. Less flippy floppy, I'll tell you that. But we look at that and we say, well, you know, it's not down massively, so clearly it couldn't have been a terrible report, but hey, that's what we get clues for this, okay? Let's take a look at these earnings and see why we're down even a little bit though. Part of my reasoning too, again, that's been such a hot stock, man. It's tough to keep going upwards after even if the earnings is great, it's tough to. Curious too if you'd like me to bust out Thinkorswim for this charting too. Obviously, Google's not great about this. It's just convenient for me so I can switch between tabs. But hey, I happily bust out Thinkorswim here and get more in-depth breakdown if you want to see kind of where things are at, where the buys or sells are taking place. Always happy to bust that out if you want me to. So I actually have CNBC this time. Believe it or not, it's not Seeking Alpha. You want to know why? I'm tired of their freaking ads. Every page has freaking ads now on Seeking Alpha. It's worth doing on the mobile app. I would not touch Seeking Alpha on the on the browser anymore. It's just trash lately. Um, they've really ruined it. Good grief. Anyways, here we go. We get these numbers here, and I look at them, and I'm pretty pleased when I look at this from an EPS standpoint. 293 against a 278. We got that's the expectation, I should say. So we beat there. Profit did beat, which is great, twofold. Not only is it just a beat, above expectations, but this also means that forward expected PE ratio does go down here now too. And obviously the trailing one does too, because that bolsters expectations a little bit higher, right? We want them to be a little bit higher. And on top of that, your trailing 12 months is just higher anyway. So it does help lower the P ratio a little bit. We love talking about valuation. And from an revenue perspective, looks like they beat right about $900 million from what I'm seeing here. So not quite the billion I expected, but I will tell you, I told you a billion, it was 900 million. Pretty decent guess on this one, right? I saw some good stuff coming out of the company in terms of data, and I think there's going to be, we're going to go into the segments here too. Not only intelligent cloud, but obviously you've got that. We're going to talk about ads. We're going to talk about gaming. We'll see what that does. We'll pull up the press release here shortly. And that's really all I wanted to pull up. I'm sure the CNBC article probably pulls up basically everything. The revenue was a 17% increase year over year, just so you're aware. And then the earnings per share increased or the net income, which again I love looking at, by the way, 21.87 billion. That is absolutely fantastic. We're talking from a free cash flow perspective. 30%. 30% of that revenue is straight net income. That's what's beautiful about this company, and the fact that they're able to just. This is one of those companies that I say prints money. You're telling me in 3 months' time they've made $21 billion, regardless of expenses. They've actually announced recently, they announced layoffs from the Microsoft, or from the gaming perspective, so like the actual Microsoft team, as far as Xbox and that, a few layoffs. And they're still making a lot of money, which means next quarter they should make even more money. So it is good to see there. Um, they're not a company that's laying off out of necessity. They're laying off just for efficiency's sake. If they're unneeded positions, why would you not just make more money for your shareholders when you can? Let's get to the press release, kind of see what's going on. By the way, look at the default here on this one, and tell me who's reading it this. I my eyesight's terrible. I can't read that, so I'm zoomed into 150 just so we can even have an attempt to see this. So here we go again on my own, going down the only road that I have ever known. So we saw increase on a net income standpoint of 33%. Absolutely incredible when I see that. So EPS and obviously the net income in turn, 33%. So love to see that. So here, what I do like, a couple words here, not only from the CEO, but Amy Hood's got some words here. There was strong execution. This is Amy Hood, by the way, her voice. Strong execution by our sales team and partners drove Microsoft Cloud revenue to 33.7 billion, up 24% year over year. So obviously they're going to talk about and highlight cloud. That's a big focus on Microsoft right now, is Microsoft Azure, because it's the fastest growing segment and there's a lot of growth potential in the future. Everything's AI right now, right? It's cloud AI. That's what we're talking about. So we'll get into actually the numbers here in this chart, which I love too. There's a couple charts they present. They do one of the best press releases out there, Microsoft. They're pretty darn good at this. So we look at this one. This one's simply going to be talking about, revenue, net income, operating income. And you can see really the growth here, which is what I find very impressive from a year-over-year standpoint. I mean, that's $6 billion more. $5.5 billion more net income in just a year's time frame. It's really nice to see, and you can see that gradual growth. It's fantastic to see. Business highlights. We'll get into the charts here. We can chat about a couple of these though, and then we can see them in chart form. Productivity and business processes was at $19.2 billion, which is a 13% increase, which is obviously super nice. That includes Office commercial products, Office consumer products, so Microsoft Windows, and obviously the Microsoft Office suite, including Outlook. So that's obviously massive there. So commercial grew 15%, which is really big there, obviously being, one of the big pieces of it. Commercials quite a bit. Office 365 drove the majority of that. People going from their antiquated, just, you buy the Microsoft suite, download it, to 365, which is a lot more collaborative, which is obviously massive from an actual commercial standpoint. Is that collaboration and having everything cloud-based. It's just much easier to share documents, work on the same document than having a shared document that's saved in like a file path. It's just better this way. So anyways, we go to that. Then we see that consumer, they highlight yet again, Office 365 grew to 78.4 million. LinkedIn revenue increased 9%. That's, it's really an underrated piece of their business, that LinkedIn. And you want to know why? There's a lot of untapped potential because of the fact that they're not really utilizing ad-based content on there quite yet, right? I think that's something, and they've announced they're going to. There's a lot of revenue to be made in LinkedIn as obviously one of the premier, really the premier professional social media platforms. There's a lot of growth to be had there, especially when it comes to ads. So I'm excited to see what they do with that in the future. And then cloud service revenue up 21%, driven by Dynamics 365. Now, Intelligent Cloud, obviously, this is the segment that they're going to highlight here, 20% up, server products and that. And then Azure cloud growth up 30%. Obviously, that's going to be what they're going to talk about a lot. More personal computing. This is going to be more your physical component standpoint. Windows revenue up 9%, talking about Windows OEM and commercial products and cloud services up 9%. Devices decreased 9%. And obviously this is going to be PCs, and I think they do actually include, like Xbox consoles in this one too, in the devices one, if I remember correctly. But right after that, they do talk about, and I told you gaming was going to be a big segment here, and it really is, right? So Xbox content and services increased 61%. Now, a big piece of that is here, they're going to say 50-point impact of the Activision acquisition, which took place this year, which makes sense, right? They acquired a whole nother company, which includes a bunch of extra revenue associated with that company, right? All Activision Blizzard games. So I'm not shocked to see this. That's beautiful. Then search and nude. Don't search that. Search and news advertising up 8%. Um, and again, that's because I told you ad growth continues to be there, right? The recovery is definitely there, and they returned 8.4 billion to shareholders in the form of repurchases and dividends, and they're going to be repurchasing definitely more. Um, so they're going to provide guidance on this earnings call. I don't recall the exact time of that. I think they might mention it, but that's definitely going to be the let's see, is that Janadella? Yeah, there we go. The conference call is going to be here actually right now. It started right as I started this video, and we're going to see the stock definitely react a certain way because of it. Right now, there's not much movement, but I'm sure there's probably not much going on quite yet. But we'll see that stock move as a result of this earnings call, as Satya Nadella says, several things. Um, Here's again more charts that they want to send, and this is one that's good that shows the revenue segments, how much that grows here. So really glad to see every segment showing good consistent growth. Um, Here's one that goes even further into breakdown, and really you see a growth everywhere besides this devices section, which is not all that bad in my opinion. I don't think that's terrible. It's something that is not unexpected. We've seen PC sales not necessarily be there. And obviously, from a console standpoint, the Xbox Series X has been out a few years now. There's not as much of the demand there as there once was, but they're paying for content and services instead. So, increase in prices like Xbox. I think is it called Xbox Live or is it just called Xbox? It used to be called Xbox Gold, was it not? I don't know. I haven't played Xbox in forever. It was Gold though, I think. Um, do you think it's still gold? It's gotta be. Why would you change up your name? You can't do that. Forward-looking statement. Nothing massive to talk about here. What we do want to do is go down here and we're going to look at some of these more charts here, and obviously we'll talk about balance sheet, and then we'll get into valuation just shortly after that. So. Um, from an asset perspective, I like this. They give me a 6 months comparison, which is good. So here's where they're kind of ending the year. Um, and you see the assets here have decreased by a decent amount from a current asset standpoint. A lot less in terms of just overall cash and cash equivalents. Inventories down, accounts receivable down. So it looks like they definitely received some of that, which makes sense. And you see a lot of that's turned into these long-term assets here. A massive growth in this goodwill category that they've categorized it. Love to know what kind of goes more in there. And property and equipment, seeing that accumulate is definitely interesting there. Um, just because of the fact that a lot of big companies are working on decreasing their commercial footprint in terms of real estate. Sorry, dog wants to yap. But anyways, total assets here, um, pretty good numbers there. 470 billion versus 411 billion of a year ago. So $60 billion, massive growth there in terms of assets. Now liabilities, obviously there's going to be some growth in liabilities, right? You don't just grow assets by that much when your free cash flow wasn't quite there, right? So total liabilities did increase also. Looks like by about $28 billion. Really, I guess we should be fair here. Want to be exact, $27.5 billion. So not nearly as much as you saw an increase there in terms of assets. So definitely doubled the asset growth. They did the liability growth over the last 6 months, which is great. So shareholder equity increased 32 billion. Love to see it. So let's get into valuation of this company, right? And we look at where the stock was trading, just today. And again, not much movement here after with the conference call. P/E ratio just under 40. Obviously, this movement, they didn't like that. Down 2% now. So if it sticks kind of where it's at, right around the $400 mark, let's just say, I mean, we're going to be trading at around a P ratio about, just under 39, most likely. Um, And then we look at it, and I showed you this before. We look at G Fuel, get in the game. That's not G Fuel, but historical PE ratio, it usually is going to be, low 30s for this one. It's not, crazy overpriced based off the current valuation, in my opinion. And you want to know why? I see a lot of great growth potential, and they're doing a lot of great things there. So I'm not, I'm not too upset with this in terms of just what that PE ratio says. It's not overpriced, in my opinion, for what you're getting from a company standpoint, because I'm seeing that, revenue continues to grow just in a fantastic line. I'm happy with the valuation of the stock right now. In my opinion, this is one that I have it in the account to have it for 5 to 10 years. I mean, it's something that, Microsoft's not going away. Obviously, they're stronger than ever with this acquisition of Activision. Um, that's what I got for you. I'd love to know your opinions on this one in the comments. So, hey, appreciate you and hope you have a great rest of your day, folks.